Afternoon, everybody. This is Mike Newmeyer, and we haven't made a lot of podcasts recently because of the holidays and so forth. Anyway, the thing is that most people agree, most of the industry agrees, most bankers agree that we're heading into a recession. If you listen to Jamie Dimon at J.P. Morgan, that's what he says, and I have more respect for his opinion than most others. However, most everybody in the banking business says the same thing. And if you listen to the people that are on Wall Street, they're saying the same thing. Most probably that's where we're going. So if that's the case, it makes our efforts more urgent in terms of preparing for retirement. I know people that are telling me they're not going to retire because of the situation in the economy. They're now supporting parts of their family and so forth that they weren't before. They're doing everything they can to save money, and that's great. Incidentally, do you know that the people who makes the most money in America are also reducing their expenses on basic goods? You know, you have to know how to shop. If you're a good shopper, it'll work to your advantage. I walked into a Lidl store over on York Road a few days ago, and they had 10-pound bags of chicken leg and leg quarters for $5.90 for the whole bags. Well, they sold out very quickly, but that's the kind of thing you have to be ready to take advantage of. You may have to maintain a positive attitude. You can't think, oh, gee, everything is going up, I can't buy anything, that kind of thing. You have to shop. And that's one of the stores that you have to shop in. You also have to think about, if you have a rainy day fund, and you should have a rainy day fund. That's one of the things I'm going to mention here. So if you have cash that you've been putting aside, find banks that are paying higher, interest on money market accounts. There's one I know of on Ridgely Road off of York Road that's paying almost 4% on money market and almost 5% on 1-year CDs. That's a good place to put cash if you want it available, but you want to make some money on it. Those kinds of percentages are not available, generally speaking. So I steer people in that direction. So that's something to keep in mind. Now, remember my phone number. You want to talk to me? You want to ask questions? I always am happy. We've had a lot of questions since the last podcast. They've gotten my phone number off of our website and because we give it out on the show. So my phone number, Mike Newmeyer, my phone number is 410-902-0464. Again, 410-902-0464. My job is to help other people. That's what I do. I help people. So don't hesitate. I want to help you too, okay? Now, today I'm going to give you a list of typical roadblocks that people face when it comes to retirement. And the first, number one, I'm going to mention is inflation and the current economic and financial condition that we find our country in, the world in, and ourselves in. People don't react to the word inflation. Inflation for the average person is going to the grocery store and paying $4 or $5 or $6 or $7 for a loaf of bread, depending on where you are in the United States. That's how high it can be. Then inflation is when you go to the store and buy butter or milk and you find the cost has increased by 20 or 30 or 40% over a year. So you look at the things that you are buying on a regular basis and you see inflation. That's inflation for the average person, is experiencing it at the grocery store. Now, gas has come down some because oil has come down some, but don't rely on that. Oil's going back up. It's already started back up. We're going to face serious problems with energy as we move deeper into the wintertime, and incidentally, a lot of the oil has come out of the reserves, our defense reserves that we keep in oil, and we can't keep doing that. So then our oil will automatically go back up, and until we unlock the oil industry, we're going to see prices go up. Remember this. The oil industry has been told that they are going out of business, That's what the government has told them. So if you were running a oil company and you were producing products to sell to the consumer, do you think that you would always reduce the prices when you could if you think that your business is going to be going away? No, I don't think so. So that's the way they're looking at it. That's the way they're looking at it. So that's the same thing, for instance, with tobacco. Why do we pay? I don't smoke, but why would a person pay $9 or $10 for a pack of cigarettes? Go back in time when it was 20 cents, when it was 50 cents, when it was $1 for a pack of cigarettes, and now it's $10 because demand has gone down and supply has gone down, and the tobacco companies want to stay in business, so they charge more. So that's another example of what can happen with government regulation when they put high taxes on things like cigarettes. And if we took the taxes off of gasoline, of course, the cost would go down there. Not that much because the supply isn't there, and it isn't probably going to be there under the current regulations. Okay. But anyway, so as we approach retirement, these are some things that I cover in my seminars, and I want to give you the advantage of that information now. Remember, you can call me at 410-902-0464. 410-902-0464. You can also go on our website and find information there, Game Plan for Retirement, and you can look at that. And you can even get some of our podcasts off of that. Now, let me say, in addition to that, of course, you can call me, you can go on, you can email us, mike.gameplanforretirement@gmail.com. That's mike.gameplanforretirement@gmail.com. Now, the for retirement, there's no numbers in there. That's not a for. That's F. So do it that way, and you can always contact me that way. Now on the podcast, all you have to do is Mike Neumeier. The same way. Let me spell Neumeier for you. It's Neumeier. So that's how you spell Neumeier, and it's Mike Neumeier to get my podcast. Okay, that's great. So what we're talking about today, you can pick up the podcast that way, and you can follow us. You can follow us, and that'll make it a little easier. Okay. So how do we prepare for what's going on now and to hopefully retire? Don't set financial goals. One of the things people don't do, these are things they don't do, and it creates roadblocks. They don't set financial goals to achieve their retirement. Now, one of the things that you got to do is you got to have monthly savings. You got to pay yourself first. You need to send up automatic ACH, with your bank to transfer that money into anything you're going to use for retirement. Now, we'll talk about the safe places to put that money. I gave you a couple ideas on extra cash where you can put money and earn interest. But the best thing you can do in preparing for retirement is to put that money in the kinds of annuities that we market, because that money can never be lost. That money will give you lifetime income. So if you're going to roll over a plan or an IRA, then these products that I'm talking about now, the kinds of annuities that we use that are insured and guaranteed, are a great place to put your money because you can never lose money, and they can provide you with lifetime income. And some of the products will actually increase in income to you over time. So call me. Let's talk about it. Come on in, and I can show you how it works. I'm more than happy to help you make these changes. We do a lot of rollovers. So again, Mike Neumeier, 410-902-0464. So another thing you want to keep in mind is be positive. You're going to find out being positive about everything that we're dealing with, no matter how negative it may seem. Think positively how this is going to be solved. And you'll be looking for opportunities, and opportunities will turn up if you're positive. Very important. How about a financial inventory? How many of you out there really know what your total assets are? Things that you haven't even talked about. And I'm going to give you a list of assets, and I'm going to show you how to create, a statement of actual assets and liabilities and so forth to find your net worth. Assets minus liabilities is your net worth. So I'm going to show you how to do that. And don't be afraid to ask questions. A lot of people don't want to ask questions. Big mistake. Big mistake. I can tell you in the seminars that I've put on, in the beginning, only a few people ask questions. After a while, they overcome their shyness and they ask more questions, and that's good. Don't be afraid to ask questions. You know, we only go around in life one time, and you need that information to get the best in retirement, the best kinds of income, and the best kinds of financial results. So ask questions. And then you need to track your accounts. You know, a lot of people don't. I'll say to someone, well, how much is in your retirement account? And they'll say, 180 or 200,000. I said, when's the last time you looked at it? Oh, I haven't really looked at it in 3 or 4 months, something like that. The thing is, you need to track your accounts at least on a monthly basis. And that includes your savings and your checking account and your accounts for retirement, everything you've got that can change. You need to look at it at least once a month, maybe more often. Maybe more often. This is an area it doesn't hurt to be obsessive about. Your money. Protect your money. You have to take care of yourself. Nobody else is going to take care of you if you don't take care of yourself. Okay? So that's something to be and incidentally, what about mortgages? What about refinancing mortgages? What about getting the rate down if you can? Now we're moving up. We were moving down earlier. Great time to have done refinancing. Not as attractive now, but be conscious of it. If you can get refinancing and you can get a better rate, well, then you need to consider that. And don't guess at answers. You know, talk to your tax person. You know, talk to your mortgage broker. Talk to the bankers. Talk to me. Talk to people that can give you answers. You know, otherwise you can make mistakes that can really hurt you. Don't invest. If you don't invest early, then get started now on a regular basis. As I said before, create an automatic transfer. Max out your IRAs or your Roth IRAs and max out the plan at work, but don't lose the money. You know, for instance, if you were working for the government, federal government, you can use the G fund. And they have another fund now also that you can use to conserve the money. If you're in a regular 401k or something like that, you know, look for things like stable value where you can't lose money. And people will say, well, I won't make much. Yes, that's also true. But until we reach stability in the market, you want to protect your money. You don't want to be in there for all the volatility. You know, that creates stress. It's not good for you. It's not going to help you in the long term. You've got to manage your own account. Remember, something we've always said is you are your bank. You are your bank. Okay? And I got to watch the time because when we get to about 10 minutes of recording, then I'll carry it on in the next one. So we got 3 minutes left. Is that correct, Miss Producer? My producer says we got 3 minutes left. Okay. So I know she knows because I don't keep track of the time like she does. All right. And then using the tax laws to your advantage. How can you do that if you don't talk to your accountant? You don't talk to your... How many people actually talk to their accountant more than once a year? They talk to their accountant when they're getting ready to do their taxes, or their accountant calls them. But you got to talk to them more often than that, or send them emails. You know, what should I be doing now to prepare for taxes, to reduce my taxes for this year? What should I be doing now? You know, and that's the kind of thing you want to learn about as quickly as you can. And let's see what else. You know, you need to know the interest that you're paying on everything. And remember, inflation is a form of taxation. But you need to remember, you need to find out what you're paying in interest. I have people that are transferring credit card balances, and they're transferring some of those to higher interest rates. You know, you need to look at all those kinds of things. Look for credit cards that pay you cash back. You know, as an example, Wells Fargo has one that will give you 2% on everything. Now, that's worth considering. Okay, especially if you're using your credit cards a lot. One thing about credit cards that's good is that you can track your expenses. That's also true. But if you're just going to use a credit card to max it out, you know, and you don't really control it that well, then you better steer away from the credit cards. Okay. You need to know what the interest, we said that already. Okay. And then you need to have a rainy day fund. What's a rainy day fund? Well, I told you about high interest checking accounts or money market accounts, et cetera, et cetera. And those are totally liquid. So there's a good place to put rainy day funds. How much? Well, if you got it, you need to put away a month or 2 months of regular expenses. What would happen if you lost your job? Now, there's a lot of layoffs taking place with large companies today because they anticipate reduced sales and so forth and so on. They're not going to need as many people. They may pay severance pay, but that's not going to cover all your expenses. So we have to protect ourselves. What if you get sick and you can't work? Well, you may get unemployment, you may get some other benefits, but it's not going to cover your expenses. So you need to prepare for those times. And if you just ignore it, you could face a big problem. All right, so those are some other things. How are we doing on time? We're done. Okay, we're going to come back in the next session and cover the rest of these ideas. So come back. We'll be following this one pretty fast, okay?